Warren Hogan is a regular on this program, an economic advisor with Judo Bank. IMF upgrading its outlook for the year ahead. What did you make of it, Warren?
Yeah, there's pretty much a reflection of what we've seen while we were on holidays over the summer. Some better news out of US and Europe, which defying all the gloom we saw last year, fears of recession. I mean, those economies are slowing, but they're slowing at a reasonably steady, modest pace. And of course, the improvement in emerging markets, most importantly, China. And of course, in the last few weeks, the reopening and the expectation that China's economy is going to bounce very strongly. So, look, I think the upgrade to growth is a good one. I think it's the right way to think about it, but it's not necessarily going to make our life any easier here in Australia because we've got to slow our economy down, and we too also don't look like we're slowing enough over the summer.
The retail trade figures, though, showed they were down significantly in December. How will that feed into the RBA's thinking?
Yeah, look, I think we've got to be careful with those numbers for December. The ABS is having some real troubles dealing with the Black Friday, Christmas behavioural changes. And that's the seasonal adjustment that they have to do to all statistics. And it's clearly not working. It's a noisy data series at the best of times, so there's always a bit of a grain of salt you've got to take on any monthly figure. So if you look at the annual numbers, which sort of looks through some of that stuff, it's still growing at 7.5%, and it was unchanged from November. So, look, I think it will, give them a little bit of pause, but there's not evidence the economy is slowing enough, in my view.
The Reserve Bank review continues. Should the inflation target band of 2 to 3%, should that be amended?
Yeah, well, we'll find out what the review committee thinks in the next 6 weeks. All of us economists waiting with bated breath. I think it should be. I think our target of 2 to 3% is higher than the global. The global standard's 2%. There were good reasons 30 odd years ago why we had a higher inflation target, but those reasons no longer exist. So, I know we've got a lot of inflation at the moment, but it might sound a bit strange, but I think we should revise down our target in line with the rest of the world to 1 to 3. I think that's probably not going to happen. I think they'll just stick with what we've got.
What are your thoughts on the idea of the RBA having two boards, one that runs the bank, one that sets the rates, getting more economists on the other board?
Yeah, I think it's a great idea. I know there's people who say that it hasn't necessarily delivered better outcomes in the countries like the UK that use it, but we don't know the counterfactual. We don't know what would happen if they'd stuck with the old structures. So I think they need to go in that direction. I think they need to have a governance board with an independent chair, a very well-respected Australian with management and experience of running organisations. And look, the politicians can stack the board with whoever they want, unions, business leaders, whatever. And then we have a professional monetary policy committee to look after interest rates. And that would be 3 RBA insiders, 3 external, professional economists, forecasters, people with real-world decision-making experience. And then you'd have a board member, maybe even the chairperson, as a circuit breaker. So a 7-person committee. And I think that would produce a much better outcome over the long term for Australia. Those committee members from the outside of the RBA would obviously have the utmost respect for what the RBA does and the individuals involved. And I think it would be a very collaborative environment and deliver great outcomes for Australia.
Warren Hogan, great to get your insights as always. We're out of time. We'll catch you soon.